Hello, this is Japanese Economic Review Channel. Welcome to the May 2026 Japan Trade Statistics Briefing. Today we will unpack a fascinating paradox. While Japan achieved record-breaking export values this May, we simultaneously tumbled back into a trade deficit. This presentation reveals the structural realities hiding behind these impressive headline numbers, exploring how currency dynamics reshape Japan's economic posture. Let's look at the top-line figures. Exports surged by 17% year-over-year to 9.51 trillion yen, marking the highest May on record. However, imports also hit a historic May high, growing 12.5% to 9.89 trillion yen. Consequently, Japan recorded a deficit of 378.6 billion yen, falling into the red for the first time in 4 months. The absolute scale of inbound costs simply overpowered our export generation. The catalyst for this paradox is currency distortion. With the yen depreciating 10% to 158.29 per dollar, nominal values are highly inflated. The 17% export growth translates to a mere 0.5% increase in actual volume. More alarmingly, import volumes shrank by 6.8%, yet their nominal value jumped 12.5%. This clearly demonstrates that our deficit is driven by imported inflation, not domestic demand. The catalyst for this paradox is currency distortion. With the yen depreciating 10% to 158.29 per dollar, nominal values are highly inflated. The 17% export growth translates to a mere 0.5% increase in actual volume. More alarmingly, import volumes shrank by 6.8%, yet their nominal value jumped 12.5%. This clearly demonstrates that our deficit is driven by imported inflation, not domestic demand. Our global scorecard reveals a universal tightening. While exports grew across all major markets, the US, EU, Asia, and China, the net balances are deteriorating. We maintain surpluses with the US and Asia, but they are under pressure. Meanwhile, the EU balance flipped to a deficit, and the Chinese deficit deepened. Double-digit export momentum is failing to outpace the surging cost of imports. Focusing on the US, our trade surplus shrank by 19.9%, despite an explosive 85.1% growth in auto exports. This erosion is due to massive inbound acquisitions. We saw an anomalous 663.4% surge in crude oil imports from the US, along with a 215.4% spike in semiconductor manufacturing equipment. Robust American demand for Japanese cars is heavily offset by our reliance on US energy and tech infrastructure. The European Union presents a similar challenge. Our balance fell back into a 250.6 billion yen deficit for the first time in 2 months. While stable exports like autos grew by 56.6%, they were overshadowed by concentrated import spikes. Petroleum product imports from the EU skyrocketed 469.8%, dragging the regional ledger deep into the red despite strong machinery sales. Asia remains our dominant volume partner, sustaining a 286.9 billion yen surplus. Here, we observe a highly circular tech loop. Japan exports massive volumes of semiconductors, up 64.8%, while simultaneously importing huge quantities of chips, up 94.2% from the same region. As a central processing node for Asia's tech ecosystem, high transaction volumes amplify our exposure to currency risks. China represents our most persistent structural challenge, marking 62 consecutive months of trade deficit, now at 649.7 billion yen. Even a staggering 84.9% surge in semiconductor exports to China couldn't close the gap. This growth was consumed by the sheer volume of communications equipment we import in return, highlighting a deeply entrenched reliance on Chinese tech manufacturing. Looking at the 13-month trajectory, Japan's macro trade environment remains highly volatile. After enduring a deep winter deficit, we saw a brief 3-month surplus recovery from February to April 2026. However, May's plunge back into a deficit proves our vulnerability. Despite continuous value growth, the total balance remains at the mercy of sudden energy and tech import spikes. To conclude, 3 forces define Japan's posture. First, the currency illusion. Double-digit nominal growth masks stagnant actual volumes. Second, the semiconductor megatrend, explosive tech exports, are offset by equally massive inbound chip components. Finally, the energy anchor. Anomalous spikes in petroleum imports systematically erase our industrial gains. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.